Good evening again from New York. I'm joined now by George Hessler, who's the Executive Vice President of Line Brokerage. Mr. Hessler, thank you for joining Automated Trading TV.
Sure.
Perhaps you could speak just to our readers a little bit about Line Brokerage and what it is you do.
Sure. Line Brokerage is an agency broker, and we specialize in the high-frequency agency space. So we're one of the leaders in the high-frequency space. So for the traders that are low latency oriented, algorithmic traders, we are, I believe, the largest agency broker in the United States.
Okay, thank you. We've been here at the presentation. There's been a lot of talk about what's coming down the pipe for automated algorithmic trading models. What do you see as the greatest challenge for people building algorithmic models, and what are they going to have to do to build a better model to make more profit?
Well, I think the challenges are definitely apparent right now. We are going through a transitional phase where we're coming out of a high VIX environment and moving into a low volatility environment. And so the question right now is for traders to make the adaptations required given the current market conditions. For example, if you look at certain ETFs like FAS, that have grown so much in a short period of time, the leverage inherent in the ETFs themselves has reduced the requirement for trading, say, the Qs or the spiders. So that's one example of, some adaptations that people are making to accommodate the new wave of trading. They're making markets in those new double and triple leveraged ETFs. They are adapting to a lower volatility environment and using the inherent leverage in those particular vehicles. And as I look across the spectrum, we're seeing a shifting of overall volume within that space. So it's really remaining nimble. I think that's the most important thing that people have to focus on. We are seeing new entrants in the space. One of the big changes we've seen take place in the last year is people leaving very large broker-dealers, partly because of the problems that they've had overall and for compensation issues, and even leaving large virtual trading operations like Citadel and other large virtual market makers, and moving off into their own space. So if those people are taking on the responsibility of growing that particular market space, we're seeing a lot of movement going on, both from the standpoint of the vehicles themselves and also the places of employment and how people are using their own capital.
So is it fair to say that in the changing world, bigger is not always better?
As long as we continue to see in the marketplace new firms popping up throughout the market, that's a sign of a very vibrant marketplace. So we're not anywhere near the end of this particular cycle. While the overall space, in my opinion, is maturing somewhat, the fact that so many people are leaving to start their own shops means that there's still a lot of opportunity for the automated trader.
That's what our readers like to hear. Thank you, sir.
Yeah.